Once you overcome this one mistake 90% of traders make, you will become profitable. On my 5-year journey as a trader, I failed for years. I blew up multiple trading accounts, I kept breaking my rules, and every time I would tell myself I would change my trading plan or try to stick to my rules, all it took was one big losing trade and I would go back to revenge trading. That was until I finally mastered human psychology. In this video, I'm going to show you how to beat the mental game of trading. And I'll share all the lessons I have learned personally in the last 5 years that helped me become a profitable trader. So 90% of traders fail because of human conditioning. It took me years of failure to become a profitable trader. That's because I kept losing even with a system that was profitable. In this video, I'm going to explain how I overcame my mind to become a profitable trader. And I'm going to show you how to become a consistent trader with 7 simple steps. At the end of the video, you'll know how to beat the mental game of trading. And in this video, we're going to go over 7 traps that every trader has gone through at one point in their career. And therefore, it's important for you to overcome and solve every one of these traps that do arise while you're trading. And every single trap is going to build up against each other. So trap 1 is going to overcome trap 2, and trap 2 is going to overcome trap 3. So we're going to go every single one step by step. And the last trap 7 is going to be the most important one to take note of. And once you tie all of these together, you'll be on the road to profitability. So what is trap number 1? Well, first we have to understand how our brain works. Our brain is wired for survival. This is the first and most important thing you have to understand. When we're trading, there's 3 ways our brain looks at the problem we have ahead of us. We have a survival state, an emotional state, and an executive state. With all 3 of these different components, our brain reacts differently in each state. And therefore, it's important to understand what each of these states are and how we can overcome each one and how we can see consistency. Like I said, we have the survival state, emotional state, and the calm and prepared state. How do all these 3 compare? And what are we looking for to see consistency? First, let's talk about the survival state our brain goes through. This specifically happens when you lose. When you start losing a trade, you ask one simple question, and that is, am I safe? As humans, one of the most important things we look for is safety. This could be job security, financial security, or just physical security. We always want to ensure that we're safe so we can have a longer and happier life. The second you lose, you start asking yourself the same question but in different terms. Will I lose more money? You'll start asking yourself, should I get out the trade even though it passed your stop loss? And now you're going to be going into that survival part of your brain. And you can't think straight after you lose. So now you're back in that survival mode. Then on top of that, you're going to start asking yourself, how can I make this back? Now you're trying to find ways to get back your money, because if you don't, you're not going to be a consistent trader. Now, rather you looking for proper trades with your proper strategy, you're just taking random trades at any entry point, trying to just get back your money as quick as possible without even thinking. Because of this, you will slowly bleed out your account because you can't focus on one setup. All you're focusing on is the safety that the money trading is giving you. Now, this is similar to being in an emotional state as well. Once you lose, you're going to start thinking if you can get your money back and how you can do it. And what that leads to is revenge trading. This is when you completely throw out your strategy and your system and your risk management, just taking any trade, trying to just get your money back that you lost. And in this emotional state, you're going to start asking yourself, will I ever make my money back? And I need to win. Rather than looking at your A+ setups to take, you're going to be looking to just take any setup just to get your loss back. Because you need to win, you're very emotional after losing that first trade. Then you start telling yourself, all I need is one more trade. If I get one more trade and I win, then I'll stop trading for the day. But in reality, that leads to you taking more trades. And the more trades that you take out of your system, that's just plain gambling. And you will give back all your money to the market and you will blow your account. And you're going to lose money faster than just following your original strategy and your proven system on taking A+ trades. And finally, we have the third state, and this is where we want to be. This is when you're completely calm and prepared for the market. This is where profitable trading takes place. This is where when you do lose, you ask yourself, how can I learn from my loss? What did I do wrong? And how can I use this to my advantage to prevent more losses in the future? Now, rather you trying to jump into another trade to get your money back, you tell yourself, I need to follow my plan and stick with my consistency. Because we know trading is not a short-term game. We want to look for the long-term and consistent gains. So when you're calm and prepared, you know that you just need to follow one proven system and stick with your risk management to become profitable. And if you lose, you just simply walk away and try not to get in another trade just because you want to get your money back right away. And when you're in this state and you take a couple losses, you can just simply walk away for the day. You don't go back to being emotional and get back to revenge trading. You can actually cut your day short and walk away with minimal losses. Because you always have tomorrow to trade as long as you preserve your capital. In trading, the traders that are most profitable stayed in the game longer than any other trader that comes in just trying to make quick money. You need to fall in love with the process of becoming a consistent trader. You need to fall in love with your plan and your proven system. That's why I always say simplicity is key in trading. Don't try to overcomplicate things. Don't try to take on multiple trading strategies that you don't even know which one works best with you. And if you don't have a profitable trading strategy, I have a whole YouTube video on my channel you can check out and look at what I use. I break it down. It's very simple, and I use the same strategy every day to become profitable. So when you're in that survival and emotional state, this is where 90% of traders trade. And this is why most traders fail, because they can't think logically. They're taking trades off of emotion and fear. And this is the fastest way to blow up your account. Only 10% of traders can consistently be in the calm state. And this is the state we want to be in. By the end of this video, we will learn how to always be in this calm and prepared state, and how to mitigate the survival and emotional state that humans are naturally drawn to. Here's trap 2, and that's fearing losing more than winning. If you're watching this video, this is something you definitely can relate to. And this is where you simply won't enter a trade because you fear of losing. And this thought of losing scares you more than actually trying to win a trade. The reason this happens is because when you take a loss, it'll trigger your flight or fight system. I want to ask you a very simple question. Do you all of a sudden start shaking when you enter a trade? Or do you feel your heart rate increasing when you enter a trade and just feel more anxiety? This usually occurs when you enter a trade with too much size or too much money on the line. Meaning, if you're a brand new trader and you should only be trading with a couple $100s, but you're putting thousands of dollars on a trade just trying to make some quick money. But in reality, all this does is just makes you lose money quicker. And therefore, you're stressed out the second you enter the trade. And you can't think straight anymore. This will make you have irrational decisions based off the two states we talked about earlier, your emotional and survival state. And like I said earlier in this video, every trap builds upon each other. And when you fear losing more than winning, the only decisions you're going to make now is going to be based off the emotional and survival state. And we already talked about why we don't want to do that. Because you're in the survival mode now, you're going to start hesitating on high quality setups. Have you ever seen a high probability setup? And for this example, we're going to do the break and retest. This is a system that I use consistently every single day I trade, where we look for a breakout and a retest of a support level. This is an A+ setup, but now since your decisions are based off emotion and survival, you're going to hesitate on this. Even when you see buyers stepping in, you still won't enter because you fear of losing too much. You think theoretically, what if the stock goes down? But in reality, when that stock goes all the way up into your profit target, just how you originally planned, but you hesitated on this high quality setup, well now, not only you're at a higher emotional state, you also left money on the table. And you lost a good opportunity to take a nice trade to make money. And what 90% of traders do at this point, they're just gonna randomly buy in at any high point of the stock. After missing the best opportunity of getting in, now they're getting at probably a lot worse risk to reward ratio when they enter in at the height of the stock. And what 90% of traders tend to do is, let's say the stock moved up, now they're just randomly gonna buy in. So when they had that low risk, high probability setup, that is an A+ setup, they didn't enter. Now they fear that the trade's gonna go higher, so they buy in at the top near a resistance level and end up losing the trade. And now not only that you didn't make good money on the good trade entry, you also lost trying to chase the trade. And because you did this, you will continuously fear losing money taking trades. So we have to understand, when we see a high probability setup, we don't want to think based off flight or fight. You want to be calm and collective when you enter a trade. If your heart is pounding or you're shaking, that means you're putting too much money on the line and you're probably not taking a high probability setup. Now, trap number 3 builds upon trap 2, and the question is trading a 50-50 game? We know there's only 2 outcomes when you enter a trade, and that's being a winner or a loser. But if there's only truly 2 outcomes, why do we hesitate on our entries? Why are we so scared? Because technically we should be winning 50% of the time. But for us, when we trade, that just doesn't seem to happen. But in reality, your win rate feels much lower. So why is that? Each trade that you take is an independent event. It doesn't rely on the previous event. So if I use the example of a dice right here, if I told you I wanted to roll the number 1 on this dice, there's a 1 in 6 chance I'm gonna roll the number 1 on this dice. So if I roll this dice 6 times, is there 100% of me hitting the number 1? No. Even though I did 6 rolls and there's a 1 in 6 chance of me landing on the number 1, that doesn't mean every time I roll the previous number gets eliminated. So theoretically, let's say I roll this dice 6 times, and on the first one I land on 4, the second time's 3, and on the third one I roll a number 2. This doesn't mean that all these 3 numbers will now get eliminated. These numbers have a 1 in 6 chance of showing up again every time I roll. It's the same thing looking at the coin. Every time we flip a coin, we have a 50-50 chance of landing on one side. We have a 50-50 chance of landing on either heads or tails. So it doesn't mean if I flip the coin 10 times, I'm gonna get 5 heads and 5 tails. I can get 2 heads and 8 tails. The point I'm trying to get at is, in trading, the previous trade has no correlation to the new trade. So even if your win rate is 50%, 60%, or even 90%, it doesn't mean because you lost the previous 5 trades or the last 10 trades, it's not guaranteed you're going to win that 11th trade. It is all an independent event, and the previous trade does not matter. So in trading, the more data we have, the more accurate our system becomes. For this example, let's say we have a 50% win rate like we talked about earlier. And let's say we took 10 trades, we won 3 trades and lost 7. This gives us a 30% win rate. So when new traders come in and they trade a specific strategy or system, they see this lower win rate, they're just gonna jump over onto the next strategy. And they're gonna try to look for the holy grail or a higher win rate system. But what they don't understand, they only did this with a 10 trade data size. You need to have multiple points of data to truly understand your system. Now let's say we took 100 trades, we won 53 times and we lost 47. That gives us a 53% win rate. This is in fact 3% higher than that original 50% win rate we're talked about. This is why more data and more trades is what you need to become more consistent. And therefore, when you lose in the short term, especially as a beginner trader, it's not your strategy. It's you not being patient enough to take enough trades to let that strategy work out. You need to take hundreds of trades to get that proven edge that all profitable traders have. But what you need to understand is the patience that you need to acquire and build a accurate and proven system. Trap number 4 is you want the reward without the pain. Right now, if you think about your specific life, you're probably used to the fixed reward system. And what does that mean? Now let's look at your job or work. Or even if you're in school, we can use this as an example. When you're looking at both these things, how do you get rewarded? You get rewarded by putting in more time. The more time you put in, the better rewards you get. So if you're getting paid $10 an hour at your job, what does this mean? So every 5 hours you get $50. And if you increase that to 10 hours, all of a sudden now you're making $100 with the same fixed $10 an hour that you're making, and you increase the hard work you're putting in. So every time you add more hours of hard work, you get paid more money. But if we look at trading, we are not getting paid for our time. Rather, you're getting paid for decisions. In this trade example here, this was a 1 hour day total. We started trading at 9:30 and the final contract scale out was at 10:30 here. This was an $11,000 trade by trading a simply profitable system and making the decision to enter this high quality setup. Just because you're sitting in front of the charts for hours a day doesn't mean you're gonna make more money. You can make the same amount of money in 1 hour than you can make in 7 hours sitting in front of the charts. But in trading, we get paid for our decisions when we see high probability setups. We don't get paid from sitting in front of the markets as soon as they open all the way till they close. And therefore for me, I trade the first 2 hours of every day when the market opens, and then after that I call it. I trade from 9:30 a.m. Eastern to 11:30 a.m. and then I can go enjoy the rest of my day whether I won, broke even, or lost. This is something you need to ingrain in the back of your head, because the more time you spend on the charts is probably a bigger chance you're gonna lose more money or give profits back to the market. Now, as we talk about rewiring our brains, trap number 5 is bad habits build fast and compound quick. As the human mind evolved over the years, one thing we know clearly is that we pick up negative habits quicker than positive. As we're building our habits, it takes 67 days to truly build a habit. And these are some of the bad habits I see traders build quickly because they don't even understand that they're doing them. And therefore, I'm going to talk about how to mitigate each and every single one of these bad habits, and so you don't make the same mistakes as the other 90% of traders. So we're going to talk about over trading, over leveraging, being impatient, and the most important one, fear of missing out. So let's go over trading. This means that you're always forcing profits or a trade when nothing is clear. Most likely, this will occur when you're revenge trading, when you already lost a trade in the day and you're looking to make that money back. So you're going to get into over trading just to make back what you lost. And the end result to this is you'll lose 10 times more than you planned to. If your max daily risk is $100, you can't lose more than $100 a day. Well, now when you're over trading and not thinking properly, because like we talked about in step 1, you don't have that calm and prepared mindset. Now all of a sudden you lost $1,000, which is 10x more than what you were originally planning to lose, because you couldn't keep yourself calm and patient and you couldn't walk away from the screen. So it is important that you don't overtrade so you don't lose more money than you intend to. Number 2 is over leveraging. This is what happens when you try to make big money in a short period of time. When you want to make more money, what's the first thing that comes to your head? You're going to tell yourself, well, let me put on more size or put in more money on a trade. And this is where I see traders start to full port. They'll see a nice setup or even a A+ setup, so they full port their whole trade. They'll put all their money in their account on one trade, because if this trade works out, they can make a lot of money very quickly. And what does this result in? Even if it's an A+ system, that doesn't mean it's going to work 100% of the time. Even if you won the first trade, that just builds the bad habit for you to oversize and over leverage on any other trade. All it takes is one bad losing day of you over leveraging or oversizing to blow your full account. And this is very important, that we do not over leverage on every trade, and that we do not over trade either, because in trading, the longer term we stay in trading, the more chances of us becoming profitable, because the more time we spend in the game, the more experience we get. And the only way we can do that is if we preserve our capital the right way. Number 3 is impatience. This is when you don't want to become a profitable trader. You just want to get in a trade really quick just to get some quick money. All you want to do is get that quick cash and leave. And you want money today. but I'm sorry to break it to you. Trading is not a get-rich-quick scheme. There's a lot of traders online that portray trading as a get-rich-quick, but in reality, that's just not true. It is the exact opposite. It took me years to truly learn and develop my system. Now, that doesn't mean it has to take you years, but you're not going to become rich overnight through trading. You need to go through the trials and tribulations and learn what it takes to become profitable. And if you have the right guidance along the way, you can make the journey a little bit faster. But that doesn't mean we're going to take $100 and turn it to $1 million. We're going to focus on slowly compounding our account, because the more we can compound our account and skills as a trader, the more efficiently we'll make money as a trader, simply based off the skill that we learned. Number 4 is fear of missing out. And this is, if you don't enter this one trade, you may miss the biggest trade of the year. So you just want to get in while the trade's going, because potentially it can do 500 to 1,000% to the upside. But realistically, that trade was never in your system, and you probably broke your plan or overtraded to do this impulsive trade. So now all of a sudden, because you have this fear of missing out, you broke your plan and took an impulsive trade. Even if you won the first trade that you broke your plan, or even if you won 2 trades breaking your plan, the more you build your habit on breaking your plan because the fear of making money, the more this is going to affect your trading long term. Because we know if we follow one proven system, we'll slowly compound our account over time. However, when you're not following your system, you're straight gambling. So yes, your account may look like this, shooting to the upside, just because you're taking these gambling trades and winning. But that one time it don't work because you broke your rules, you're just gonna blow your entire account from 1 or 2 trades. And I've seen so many traders do this. They give back all their gains. And I'm not gonna lie, I've done this too before. In the long term, if you keep breaking your rules, you will never become profitable. So you have to take it slow. You can't get rich quickly, you have to get rich slowly. You will only set yourself farther back behind by breaking your rules. Trap number 6. You make decisions through ego, not logic. Now you may be thinking to yourself, I'm a calm person, I don't have an ego, and that you're very humble. But in reality, every single person has an ego in one way or another. The only thing that differentiates ego is how you show it. But for most traders, your ego ruins your trading. And this happens because you want to win trades just to prove you're smart. For instance, let's say you're in school and you get straight A's in all of your classes. You would feel a little bit smarter than everyone else. But as soon as you start losing trade after trade after trade, your ego is gonna get hit. Then you're gonna think to yourself, are you even smart enough to trade? And you're gonna be like, why am I keep losing? And all you wanna do is take winning trades just to prove that you're smart. Let me show you an example here. So on the left side, it is a 92% win rate, and on the right side is a 40% win rate. On the left side, the trader tried to make a 92% win rate, being very cautious, losing only 1 trade. They were more cautious on their win rate compared to how much money they're trying to make. However, on the right side, this trader has only a 47% win rate, losing more trades than they won. At the end of the month, this trader made $30,000 and this trader made $35,000. So both traders walked out the month profitable. But why was that? Although your win rate is an important part in trading and you want to have a consistent win rate, what is most important is your risk management. The reason why I was losing trades in the beginning is because I didn't understand risk management and win rate. I was looking for these higher risk reward trades where I was trying to get $500 in profit, only risking $100. This is what that 1 to 5 means. And therefore, my win rate was very low. Even if I won 10 to 20% of the time, I would still become profitable. And I wasn't doing that because as a newer trader, this risk reward is harder to maintain. So what did I do? I balanced my risk to reward ratio, because trading is just truly a probability game. You don't want to aim for the highest win rate, and you don't want to aim for the highest risk reward either. And therefore, I balanced mine out. And for me, I look for a 1 to 2 risk to reward ratio, meaning every $100 I risk, I look to profit $200. And if we move this to the right, even with a 40% win rate, I can be profitable if I stick true to my system. I don't need to win every single trade. I just need to make sure my risk to reward is over that 2R multiple to make money. But if we come back to these actual examples, you can see this 47% win rate. That's lower than a coin flip, but because the profit factor was high, they still made the same profit as the 92% win rate person. And this is the exact reason why even if you lose a trade, you're not dumb. And because if you win a trade, you're not smart either. It's simply the market's probabilities playing out. But as our job as a trader is to manage our risk properly and take high quality setups and have a good edge to make money. Finally, step number 7, how to master yourself to truly become profitable. Based off everything we talked about in this video, these are the exact steps you need to follow to beat the mental and psychology game of trading. Step 1 is to create a clear trading plan you follow every single day. Step 2 is to walk away when your emotions are kicking in. When you start to feel anxious or panicky when you're in trades, that simply means you have too much size or you're looking to overtrade. So when you feel these emotions kicking in and you're not in the calm and present mindset, simply walk away from the trade. There will always be tomorrow to trade if you protect your capital. But if you run out of capital because you let your emotions get the best of you, you're not going to be able to keep trading. You won't be in this game long term. Step number 3 is to focus on small winners to build confidence. As a trader, we're here for the long term. We are looking to slowly compound our skills and money. If you're on a losing streak or you're just starting the day, look for small gains to add up, to give you a calm and present mindset. And it doesn't have to be a big trade. It's just simply trying to build your confidence off of small wins. And it's all about consistently taking high probability setups only, every single time. Step number 4 is to stay calm and journal through every single trade. Sometimes when you take a winning trade, you may have been anxious in that trade, but just because you won it, you're gonna journal in your system that it was a good day and move on. But if you actually journaled how you felt in every single trade, you're gonna be picking up key information about your own psychology that you will be able to fix only through the data that you collect over time through your winning trades and your losing trades. Finally, if you made it to the end of this video, luckily for you, I have a whole Discord posting everything that I know and all my trading strategies in here. I also do live trading and post all my trade signals that I personally take in real time. So if you're a beginner just trying to learn, it's best trying to follow someone's footsteps that's actually successful in trading. And that's something I did when I first began. I followed in someone else's footsteps to build a strategy and to build a system with confidence. Because every beginner in anything, it doesn't even have to be in trading, you will always go through trial and tribulations. No one can ever start something new, whether it's trading, playing a violin, tennis, whatever, any sport. No one is going to be good as a beginner. It's just not possible. So it's best to look at someone that is doing good in that field and just follow their footsteps and take what helps them and implement it into your own self. If you want to join my Discord and my community, my link is in the bio below. And I hope this video helped you out a lot with all this free information that I'm giving out over my 5-year experience of trading.